All right, guys, Idiot Investor here. We're back. Those two calls that we had are now sold. They sold for $2.02 each. So the current market value is sitting pretty at $476.90. It's not a bad way to go. We're up about 57.4% in the month since we started doing this channel and this account at $300. So that's not a bad run at all. That strategy that we were using, the poor man's covered call, it allowed us to make a little bit of profit for the week when we didn't have the money to to sell the put against Workhorse. But it did allow us to make profit this week as well because the call value went up. So we bought those calls at $1.49 a piece, and we sold those calls for $2.02 a piece. So we made the profit on the poor man's covered call and just the selling of the call for profit, okay? But the risk comes in the fact that Workhorse could have gone down. So if we take a look at it, if it had never come back, let's see, for the week, it was down. You can see it dropped almost to the under $3 mark. It got to $3. And then we had a good run, but we still had another month left in the call contract because, it's just a safer way to play when you go out. Even that was still short for me, but it was something that was, Workhorse was on the low end and that option premium was very low. If you remember from the video where we purchased it, it was at $1 and it was down 25%. So now Workhorse is up $4.50, and we sold these two calls. Oh, actually, I can show you that at the bottom that I placed before. Let's see, just to show you. Yep, right here. So they ended up filling limit price $2.02, and that's what we got them for. I had to screw with it a little bit in order to get them sold, but they sold at $2.02. I grabbed an extra $2 out of that per contract. Okay, so now we move on to the next play. So I think what I want to do is a $4 Workhorse call for next week. It is Friday, so I don't really want to play the market for same day here. I don't know if Workhorse is going to go up more or start to come back down a little bit. And I don't want to play a greedy play. So let's take a look at the options contract, okay? We're going to do two plays here as well. We're going to do a dividend play too. So stay tuned for that. Let's go to trade options. So if we look at today's option chain under selling a put, $4 put is only worth a penny, but the $4.50 put is worth 7 cents today. But I think that's a riskier play. We'd end up with Workhorse for $4.50. But if that price drops this afternoon, we'll be behind a little bit. I think what I want to do is a safer play. So we're going to go out to next Friday, March 25th. And the $4.50 put right there is really nice, $28. Or we could do $4 at 9 cents. But what I think I want to do is do the $4 put this particular week. And I can show you guys the dividend play. So it's a little bit safer. So let's do that. So we're going to choose the $4 strike right here. It's worth 9 cents. We'll probably only get it for 8, but let's see what happens. And let's see, we can do 1 for 0.09. Let's see if we can get someone to purchase that for us. Okay, let's do it for $8 then. $0.08. And that went through easy. Okay. All right. So we just made another $8 added to our total. So now we're at $475.88. It's not bad. Oh, don't mind this. This is from me getting rid of all my stuff to start this account. Okay, so we're up 57% for the month. This isn't a true test, 81% for the week, but Workhorse was down at the beginning of this week, so it's using that. Okay, but not a bad play. We're up 12.5% today. So let's move on to the dividend play. So now our buying power's got $84.88 in it. So what I want to do is purchase my favorite dividend stock, which is QYLD. So QYLD. This is a monthly dividend stock, so it pays every month. And what it's going to do is it's going to pay us, it averages around 20 cents per share that you own. But Monday is the ex-dividend date, so we just have to hold it. I'm just going to hold it through Monday, and then we'll sell this on Tuesday. So let's go ahead and purchase this. And we can purchase, we can get 4, right? No, yeah, we can. Okay, so we're going to purchase 4 of these for the dividend. All right, hang on. It's going to make me make a limit because it's too close to the price. So continue. The limit price will be $20.74. Market hours only. Good till close. Number of shares 4. And swipe up. There's all these notifications from Robinhood. Okay, so those are purchased. We can take a look now in our stocks. We have 4 shares of QYLD. Okay, and we should get a dividend later on, but the dividend date is Monday. So we're going to hold it through Monday, and if the price goes up, that'll be an extra little bonus. All right, so that's it for today, guys. Right now, this is what happened. We sold 2 calls for a profit. We made $104 on that play. We just made $8 on selling this Workhorse put, and we just purchased 4 shares with the leftover money for the ex-dividend date on QYLD for Monday, which should net us, it's not a lot. It's only going to be something like $1.20 or so. Actually, no, my math is wrong there. It's going to be 80 cents. But it's also fun just to show you guys a cool dividend ETF and how it's going to work. So the ex-dividend date on QYLD is Monday. And instead of just letting our leftover cash sit there in our bank, we're going to use it in order to get these dividends. All right. So aside from that, we're up since we started this channel 57% in a month. That's not really a bad gig. All right. This is just the strategy I use. Imagine if you'd gone into this with, $600 instead of $300 or $900, or even $5,000, 57%, whatever you would have started with. This is where you'd be at. All right, guys. So thanks for watching, and I can't wait to give you guys the next update.